Well, time to move on then. Godawari Power Ispat, that's the stock in focus. They're announced subdivision of shares. They've also, been in focus because of that big Chinese stimulus. To discuss this and more, we have Mr. Abhishek Agrawal, the Executive Director of Godawari Power Ispat, who joins us on the show. Hi, Abhishek. It's been a while since we spoke. Thanks a lot for speaking to us here on CNBC-TV18. Let's focus first on this Chinese stimulus. And reports are indicating that domestic pellet prices have finally seen some bit of an increase. Could you quantify it in the last 2-3 weeks? What has been the price increase? And is it driven by stronger demand?
You're absolutely correct. So there was an increase in the fines prices on the OMC auction, which has led to the increase in pellet prices in the last couple of weeks. And at the same time, there has been an upsurge in demand of steel in the domestic market. We have seen the steel prices go up by almost 8% compared to 15 days before. So I think both the reasons are played for pellet prices to go up.
All right, Abhishek, give us a few more details. I'm looking at your average realization in Q1. It was around 10,500 rupees. I think you obviously get a premium because you have a part of your portfolio that is more high-grade pellets. Could you tell us what should the average be for Q2 and for the second half of the year? Because now those price increases will come into play. So how do you see pellet prices, sponge iron prices, billet prices play out from here on?
Q2 will be probably, something about 10,000 rupees, little 5% down compared to Q1 because the market was subdued. But going forward, as the market has revived and hopefully the demand stays, we can see an uptick in pellet prices going forward from Q3 onwards.
Okay, and so what should the price range be if you have to go by the current demand on ground? If you could help us out with that. And since we're talking about pellets, what's the situation on ground? Are imports still coming in from China? And also as a percentage of your mix, I think you were indicating that you'll focus more on domestic sales. So most of your pellet sales are domestically sold?
Yeah, so I think from last 6 months, we haven't sold any exports. All our pellets are being sold domestically. So the domestic demand in India is on upsurge, especially in the Chhattisgarh market because of the increase in DRI capacity. So we are happy selling in the domestic market and we have no intention of exporting at the moment because the pricing in domestic is much better compared to domestic market, international market, sorry.
All right, but what about imports? How is the situation on ground? Are imports a worry for the domestic pellet industry?
No, I don't think so. Any imports happens from China. It's mainly on the finished steel side, which are keeping the price on the lower side, especially the flat products, coil and other products. Apart from that, I don't think so. Any imports are happening from China at the moment.
Okay, all right. Well, also, now for this year, we'll have to keep an eye out on the volumes. You've already laid out your guidance. So let's solely talk on pellets first. You were talking about production number, I think, of around 2.6, 2.7 million tons. Last year, you sold around 1.6 million tons. So what is the volume guidance for the pellet segment itself? Sales volume guidance, if you could give us that. And by when do you increase your capacity by 2 million tons? When should you see the benefit of that increased capacity?
Okay, so this year, the volume guidance has been a little lower compared to last year because we have taken an annual shutdown in one of our smaller units for almost 45 days. So the volume guidance we have given this year is about 2.4, 2.5 compared to 2.6 last year. And the sales volume should be about 1.5, a lakh lower than the last year because remaining is consumed in-house for my steel production. On the new pellet capacity, the construction is underway. We are very targeting to commission the new plant by Q1 FY25. Sorry, FY26.
Q1 FY26. So on the base of around, on a production number of around 2.5 million tons and a sales number of around 1.5 million tons of pellets, for FY26 onwards, what should the growth number look like for pellets?
Since it's going to be the first of operation, so we can consider 50% production. So from 2.4, 2.5, we can see a 3.5 million production. And from FY27 onwards, we are confident to achieve the capacity. So we can see a production of, say, 4.5, 4.7 million tons from FY27.
All right. And sales would be how much? Because some part of that will be used captively.
See, captive consumption will remain the same, which is about 0.9 million tons. Everything else will go for merchant sales. So the sales volume will be about 3.5 from FY27.
All right. Okay. All right. Abhishek, the reason that the market capitalization is nearly around 15,000 crores is because the street believes that Godawari Power Ispat, from being a bits and pieces player, just making some pellets, now you're going to have a steel plant and you're talking about a 2 million ton steel plant. So by when does that come up, and how are plans shaping up out there? Because that's been the big bet, that finally you become a fixed steel plant. So tell us more.
Two things are underway. One is the mining expansion from 3 million to 6 million. We are very close to getting the final approval from the State Pollution Board. So fully, Q4, FY24, we should get the permission to expand the mines. That is one thing. On the new steel capacity, we are on the last stage of getting the environmental clearance from MOEF. So as we said earlier, by I think end of Q3, early Q4, we will get the approvals from the desired, authorities. And when that is in hand, we will start the groundwork. So hopefully everything goes well. Probably you can see Q4, end of Q4, we can start the groundwork in the 2 million steel plant.
So FY27, you'll have a 2 million ton steel plant. Should we take that?
No, FY27 will be, too early. It takes about, 24 months to 30 months. So you can consider, Q3 FY27 or Q4 FY27.
All right. So for FY28, you'll be a 2 million ton steel plant. Are we getting that correct?
Yeah, 0.5 currently plus addition 2 million. So 2.5 million steel here.
Got it. And also you currently have around 1,000 crores of cash in your books, but your Capex plan is quite ambitious. If I'm not mistaken, it's close to around 6,000-7,000 crores odd. So would you be raising some debt, or will you do some equity issuance to come up with this money, or are your operating cash flows enough to help you fund this entire expansion?
See, currently at the moment we don't think so we need to raise any cash, but of course we need to go to banks for opening of Capex LCs for the foreign suppliers. But apart from that, depending on as and where the Capex needs to be invested, we might raise some money, we might dilute some equity. It depends, how the market is progressing. But we are very open with all the options. But we also make sure the debt equity ratio remains, with a very healthy level, which is below 1 or 0.5.
Abhishek, I wonder how the promoter entity must be feeling, because in 2023, the promoter went and sold some stake, I think, at half the current price. Mr. Mukul Agrawal and Param Capital, they got in, so they'll be quite happy. But for y'all, it could be a bit of an opportunity loss, but maybe you'll want to get in investors. So that's why I'll vent that. My question is, though, will promoter entity look to further dilute their stake from here?
At the moment, we have no intentions. We are very confident once we get the mining approval, there should be a uptick in share prices. That will be the next, driver for Godawari's share price. So at the moment, we have no intention of, diluting any shares.
Okay. And let's talk about a year and now. You've given us the broader time, for the next 3 to 4 years, we know your vision. What about your margins? Give and take everything, what should the margin number look like? You normally do mid-20s percent margins. In the first quarter, it was 30%. But this benefit of higher captive iron ore will flow through in this year. So that's what will give it a bit of a booster shot. For last year, you did around 1,300 crores of EBITDA. For this year, what can the margin EBITDA number look like?
We maintained the same levels as last year because Q2 was, much, I would say, slow compared to Q1. And the mining permission is getting delayed. So probably next year, we'll have entire 100% captive mining. So I think this year we will maintain the same EBITDA levels of 1,200 to 1,300 crores. And from next year, we can see exponential growth with the mining expansion as well as new pellet capacity.
Okay, final question there. Just want to clear this point. The stake that's there in Deccan Gold, that's in the promoter entity, right? Not in the listed entity.
No, so whatever stake is there in the Deccan Gold is totally on personal capacity, nothing to do with Godawari Power.
All right, Abhishek, we appreciate you joining in and filling us in with all those details. So we'll hold you on this EBITDA number of 12 to 1,300 crores in the near term. By FY28, you'll have a 2.5 million ton steel plant. You believe that your books are not very, very leveraged and you're not looking to sell any more stake. Thanks a lot for joining in and filling us in with an insight into how pellet prices are shaping up, as well as how your business is shaping up. For the time